So in this video I'm going to do a refined back test. It's a replay mode. So in this video I'm going to show my strategy. It involves order blocks, fair value gaps, and market structure. So let's start off with showing you my strategy. Previously I've showed my strategy, but it's a more refined version of that, so to say. So let's just go to Notion. There's Notion to refine my trading plan. So starting off with points of interest, I look at major highs and lows, also order blocks, imbalances, in case they will be filled, and then on the 15-minute time frame we will see a framework. So going to the framework, we can go either on the 4-hour or the daily. We just need an overall bias. Locating major points of interest, again, order blocks, imbalances, highs, lows. When price enters a point of interest, drop down to the 15-minute or 5-minute. In my instance, I choose the 15-minute because I like the way 15-minute moves more, and we get a more refined edge that way. So always wait for a liquidity sweep, so you're not part of the liquidity sweep, but these are only at the points of interest. So these are not at like middle of the flow, only at the tops, like the points of interest, order blocks, and the imbalances. Impulsively break structure. We don't want weak breaks of structure. We want very, very nice breaks of structure, responsible for a new either trend or just continuation. And then we enter from the order block, obviously. So this is just a fast way to refine all of this. The order is not valid anymore. When we get a new break of structure, then we can look to be selling from there or buying. Also, my order blocks are refined. The body of the close for the order block has to be smaller than the next body open and close. I will show that in this example. So let's just make this a little bit bigger. So looking at this is the daily. Overall, looking at this, what can we see? We can see order flow is bearish. Like, it doesn't take a genius to identify higher highs, higher lows. So yeah, that's the order flow. Looking at current market structure, we can go to the left, see what price can potentially react from. Okay, so here, this is the example I mean with bodies. So the body open and close of this bullish candle is smaller than the next engulfing candle, so it's engulfing pattern. So what we do is we mark this up, we name it daily order block, because we can have potential reactions from here. That's the key point. We want points of interest that we can react from, and then go on the lower time frame to look at potential opportunities. So this is our daily order block. Either we wait for price to purge this daily order block, or we wait to be continuing this uptrend by purging this low point of interest. We also have an order block right here resting below these lows, but it's not significant enough for me because it did not create a fair value gap. So let's go down to the 4-hour. Going down to the 4-hour, we can see price is very bearish. Started losing the momentum in the middle of this, so it's a little bit iffy. We just wait now to see if price reacts from this 4-hour order block, continuing a higher trend. Okay, interesting. Very weak uptrend. This indicates a lot of selling pressure going here. So we can go to the 15-minute, look for either buys from here or sells from here. So we go from point A to point B. That's our main objective with this. Okay, so we touched into that 4-hour order block. Let's just make it smaller so it's easier to identify. Oh wow, it's all the way out there. So let's get it back. Okay, let's go to the 1-hour, it's easier. Then let's take it back here. 15-minute again. So this is our point of interest. So we look where is the low after the purge of this order block. The low currently stands here. So until this low is broken or we make a new low, we don't take any trades. Okay, now we have a new low. We can identify this as the new low. Price is losing momentum. And right there we had a change of character very, very impulsively. Also, this is the ideal order block we are looking for, with the engulfing pattern. There's the 15-minute order block right there. In terms of stops, let's just wait for price to create the break of structure. We could identify this as the break of structure, but this is the overall leg. So I'm identifying this whole move as one leg. Wait, doesn't it? Okay, there we go. This is one leg, this is one leg. So it's change direction. So we can mark that as change of character. This is the change of character right here. We have a full body close, indicating good break. Obviously, the change of character is the first break of structure. It takes 2 breaks of structure before a new trend is formed. Putting my sell limit at this order block, we can see this fair value gap. I forgot to mark it up. This is the fair value gap. Obviously, looking at order flow, price is very, very bearish. Daily was bullish, but obviously at some point we were going to lose momentum. We saw a very nice daily order block reaction. Price pulling back. In terms of take profits, so the safest option would obviously be this low right here, and that's where we're going to target for this. But looking at this order block, we could still target this for a almost 10R trade. So, but for this video, I'm going to target the low. Okay, so this is how precise this is. We tapped a little bit of drawdown, not too much, nothing to complain about. Pushing down. Okay, pushed higher, but thankfully our stop loss is above the order block. A couple of pips, for example, here we have 8.2, we can make it 9.2, 1 pip above, no problem. Playing price forward, we can see internal breaks of structure. That for me is very, very healthy. We could have taken a scaling opportunity. You know what, let me show you the scaling opportunity as well, so we can stack positions right here. So when we saw this initial break of structure, this was the second break of structure after this liquidity sweep. We had this liquidity sweep right here. Liquidity was swept here. We had this change of character again, but this is a break of structure, but this is internal, so it's more subjective. Some people wouldn't take it, I would definitely take it. More profit. So this is the what break of structure? No, liquidity sweep. This was the change of character. Scaling opportunity came up. We have this valid 15-minute second order block. Putting the position tool right here. Obviously stop loss goes here. Targeting the same zone. So now we have 2 stacked positions. Let's see what price does. We obviously know what price does. That would be the tap in right there. There we go. Now we're selling off. Could take an opportunity there too, but for the sake of this video, I'm making it simple. So 2 TPs hit right there. That is crazy. So let's calculate the R. So this is 6.34 and this is 7.72. So let me get my calculator real quick. .72, and then we got, what do we have here? 6.34. 6.34. and that obviously equals 14.06R. So I'll label it 14R. So in this one trade, we got 14R in profit. That is 14%. If you're risking 1%, obviously, which I would do in this case because this strategy is so high in RR that we can make up for the losses. And this is the reason I didn't target this low. I didn't want it to consolidate, started going up, you know. Sure, we might hit it, I don't know. Let's see, yeah, we hit it. So we could have potentially gotten like a 20 RR trade, but that's fine for me. Mark it up as 14 RR, that is 14%. And for you that don't know, on a 100K account, that is $14,000. $14,000. Where do we have the dollar sign? There we go. That is $14,000. But on a 500K account, which my goal is 500K in capital, in funding, we divide that. We take the 14,000 times 5 because obviously the capital would be 5 times bigger, 5 times greater than this. So 14,000 times 5 would be $70,000 in overall profit. So in the course of, let's take out, how many pips was this? 75 pips. Interesting. Okay, so how long did this take? Where is my calculator tool? Date range. Entry was hit 7th of January at midnight. TP was hit at just 14 hours later. So within 14 hours, you could have potentially made $70,000 with a 500K account funded. You can take the rest of the month off, rest of the year off, not the year, but you can take a couple of months off and not just trade. So this is super, obviously this has flaws. Every strategy has flaws, but it wins more than it loses, and we just have a great RR to make up for the win percentage rate. I don't have a big win rate percentage. We can go over my statistics here. This is on the 100K account, remember. Let's go back. I just did this. This is within 1 month, if I'm not... Analytics, let's see, 1-2 months, something like that. So this is, I believe, 14%, 16% ROI within 2 months, 1.5 months. We took 10 trades, made $16,000, obviously on a 500K account. That would be over $70,000. That would be like $80,000. Here's the statistics if you're interested. 6%, 8% in 2 months, so 6% in January and then 8% in February. So that's interesting. This is a more refined way of my break of structure Fibonacci tool retracement strategy. I just like this more because it's more mechanical than just taking every single break of structure hoping for the best. I'm going to do my future trades like this. This is the way I want to go. Sure, this says 44% win rate, but I'm sure it's about 30% win rate with a very high risk reward. It's just that in this particular backtesting session, I chose to only target a 5.3R average RR. Obviously, I could have targeted much higher, as you can see right here. Could have made much more profit, but I want consistency over profit. Consistency is always key, and consistency will make this work. So yeah, that's all. So if you want, I can go over the trade one more time. Let's go over the trade one more time. So going to the daily, we identified a daily order block that price reacted from. We had this potential reaction point if price went down, but price went up instead. We had this potential zone price could come down to if we reacted from that daily order block. So we went to the 4-hour and saw the order flow. Order flow was not sure what it wanted to do. We created this resting liquidity that we later purged and tapped into that order block. Going back to the 15-minute, we can see this was the overall swing structure position that I was looking at. So yeah, it's a great trade. We have this change of character, this liquidity sweep. We have this order block right here. We had a scaling opportunity into the 15-minute, and it worked like a charm. It was a perfect trade. 14R, $70,000 on a 500K, 140K on a 1 million. So you can make the math on how much capital you have, but obviously this game is with capital, and it's in the long run. So I'm looking to get funded. So in the up and coming videos, I'm probably going to do a funding season. So I'm going to try to get funded by FTMO, probably 100K or 200K. But that's not yet. I still have some things to go over, like risk management, how many RR I need before I put my stop loss at break even, or if I would take partials, how many RR I am happy with, and which months that work the best. So I have a lot of detailing to do before I can go over all of that. So with all of that said, I'm done with this video, and next video will probably be a back test of this strategy. So yeah.